Assalamualaikum. My name is Fatih Farzana binti Muhammad Samri. We are from BA2495A. Today we want to present about case study, practice and prospect of Islamic real estate investment trust in Malaysian Islamic capital market. Introduction. Malaysia has always been in the vanguard of global initiative and the efforts to establish a vibrant, sustainable and feasible Islamic capital market catering the needs of Muslims and also ensuring that its products and services are attractive to all investors and issuers regardless of races and religions. Malaysia is also poised to be a global Islamic financial and capital hub as envisaged in the Capital Market Master Plan launched by Malaysian Securities Commission in 2001. Essentially, the development of a vibrant Islamic capital market requires the creation of a broad spectrum of innovative Islamic financial instruments and the infrastructure to promote active trading so as to enhance the breadth and depth of the market. An efficient capital market is also expected to provide opportunities for constructing well-diversified portfolios and to meet investors' demand in accordance with their risk and return preferences. In order to help propel the expansion of Islamic capital market in Malaysia, Securities Commission has recently introduced a new investment opportunity in the Islamic Real Estate Investment Trust or IREX. To facilitate its development, the Securities Commission has issued the guideline on the issuance of Islamic REIT. This guideline is the first guidelines on Islamic REITs in the global Islamic financial sector, essentially providing Sharia guidance on the investment and business activity on Islamic REITs.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Arif Yamin bin Zainuddin. Today, I would like to present about the nature and operation of REIT. The Securities Commission of Malaysia defines REIT as an investment vehicle that proposes to invest at least 50% of its total asset in real estate, whether through direct ownership or through a single-purpose company whose principal asset comprise real asset. REIT offers investors the opportunity to diversify and invest their portfolios in listed real estate securities that own and operate income generating from real estate such as residential, commercial, retail properties, and plantation land, which otherwise expensive if they were to invest direct. In essence, REIT operates like any other trust fund involving stakeholders like management company, trustee, and unit holders. The relationship of these parties is outlined and governed by a trust deed. The trust deed is essentially a formal document outlining the objective and principles of REIT and rights and responsibilities of a management company and a trustee respectively. The REIT must be managed and administered by a management company approved by the Securities Commission. Under the guideline on REIT, the management company must be a subsidiary of either a company involved in the financial services industry in Malaysia. The REIT is also required to have a trustee who acts as the custodian of the assets of the fund and to safeguard the interests of the unit holders. This requires continuous supervision and monitoring of the funds managed by the management company so that it complies with the objective and the deed of the fund and all related regulatory requirements and guidelines set by laws and the Securities Commission.
My name is Nusna Ashikin binti Hisham. I will continue to the characteristic of Shariah's compliant REITs. The Shariah's committee is required to supervise and ensure that all funds are managed and administered according to the Shariah principle decreed and outlined by the Security Commission. There are several specific aspects of Shariah's compliant assessment process that Security Commission has outlined in the guideline for Islamic REIT. The following are the salient aspects that need to be scrutinized when conducting Shariah's compliant assessment. Firstly, non-permissible rental activities. Since rental is the main stream of revenue for investors, it is responsible for ensuring that the rental is obtained from halal or permissible sources. The Securities Commission Shariah's Advisory Council stated that activities such as interest-based financial services, manufacture or sale of non-halal product or related product, conventional insurance, and share trading in Shariah's non-compliant security are not permissible. Secondly, rental from tenant who operates mixed activities. If the tenants operates mixed activities, even the main activities are permitted by Sharia, the rental from non-permissible activities must not exceed 20% of total turnover of the Islamic REIT. Next, method of calculating the ratio of rental of non-permissible activities. There are several approved methods that can be used for calculating the ratio of rental of non-permissible activity from a tenant's operating mixed activity. The methods include the use of rule, hour of service, and other methods considered necessary by Sharia advisors using their own ijtihad. For example, the renting of non-permissible activities in a store, such as the sale of alcohol, it might be based on the ratio of the area occupied to the total area occupied by the non-permissible activities. If the total area rented is 10,000 square feet and the area allocated to the sale of alcoholic beverage is 1,000 square feet, the ratio of area used for non-halal activities is 10%. As a result, the rental of non-permitted activities is 10% of the total rent paid by the supermarket. In this case, the 10% rental income is considered to be permissible as it is still within the acceptable 20% of the total turnover of the Islamic REITs. Next, continue to the acquisition of real estate. It is not permitted to acquire real estate in which of tenant operate non-permissible activities, even if the percentage of rental from the said real estate is within the accepted benchmark, which is below 20% of the total turnover of the Islamic REIT. Next, renting out to new tenant. In the case of renting out to a new tenant, the 20% benchmark cannot be applied in assessing the status of mid-rental income. This is because the exact rental received from non-permissible activities is still unknown. However, if the new tenant involved in activities which are impermissible, then it is not allowed for Islamic REIT fund manager to accept such tenant. For example, a well-known casino operator who's plan to rent the real estate of the Islamic REIT must not be accepted as a new tenant. Next, instrument used in investment, deposit and financing for Islamic REIT. And Islamic REITs must also ensure that all forms of investment, deposit and financing instruments comply with the Sharia principles. For example, in financing the acquisition of real estate, Islamic REIT fund manager must not engage in riba-based instruments which will have an effect on the Islamicity of the Islamic REIT operation and transaction. Moving to the actual issuance of Islamic REIT in Malaysia based on two case studies, namely Al-Aqah KPJ REITs and Al-Hadarah Boosted REIT. Firstly, Al-Aqah KPJ REIT. Al-Aqah KPJ REIT is claimed as the world's first Islamic REIT. It was established as a Malaysian-based unit trust on 28 June 2006 with the investment objective of owning and investing in Sharia-compliant real estate. When it was launched, Al-Aqah KPJ REITs owned and invested in 6 hospitals which were first acquired from KPJ Healthcare Berhad and its subsidiaries. These acquired properties are then leased back to KPJ Healthcare Berhad and its subsidiaries. In other words, Al-Aqah KPJ REITs is fully dependent on the performance and operation of the KPJ Group for its revenue. KPJ and its subsidiary companies is a healthcare-focused group and its portfolio of business include hospital management, healthcare technical service, hospital development and commissioning and other. It is expected that being the single tenant of the property and long-term player in the healthcare industry, KPJ Group is able to provide stable rental income to the Al-Aqah KPJ REITs. Next, In order to protect the unit holder interests, Amanah Raya Berhad was appointed as the trustee. As required by the Security Commission guidelines, the trustee shall actively monitor the administration of the fund by the management company to ensure that the interests of unit holders are upheld at all times. The trustee will ensure that the fund is managed and administered by Damansara REIT manager in accordance with the objective of the fund, the deed, REIT guidelines, and accepted and efficacious business practice within the real estate investment trust industry. Amanah Raya is also responsible to avoid any potential conflicts of interest arising from future acquisition of Shariah-compliant properties, especially with regard to the fact that the tenants are subsidiaries of KPJ and both the sponsor, which are KPJ Healthcare Berhad, and the manager Damansara REIT Manager Sendirian Berhad, are 71.09% owned and 100% owned subsidiary of Johor Corporation. Based on the diagram, it shows the structure of Al-Arka KPJ REITs.
Moving on to the second case study, first of all, my name is Nur Shamimi Atika binti Nohairi and I'm going to talk about Al-Hadara Boosted REIT. Al-Hadara Boosted REIT, formerly known as Kuala Lumpur Stock Exchange, and is the first Islamic REIT made up of plantation assets, particularly oil palm plantation. The initial transaction involved sale and leaseback mechanism based on the contracts of Al-Bayt and Al-Hijara. The total purchase with the basis of Al-Hadara Boosted REIT Fund is 472 million. To fund the purchase consideration of the plantation assets, Al-Hadara Boosted issues units to the vendors include Boosted Properties, Boosted Plantation Berhad, and Boosted Jushan Sendirian Berhad, as well as through public offering. These assets are subsequently leased back to the agreement. Al-Hadara Boosted REIT appointed a plantation advisor to monitor the overall state and condition of all aspects of the plantation assets. Fixed rental is the main source of income for Al-Hadara Boosted REIT. Tenants pay a cumulative fixed rental of 41.3 million per annum on a bi-monthly basis for the first tenancy term of 3 years. The new rental is determined based on historical crude palm oil prices, prevailing and extraction rates, and real per hectare. In addition to the fixed rental, other resources of income for Al-Hadara Boosted REIT include performance-based profit sharing and capital gains. The former refers to an annual profit sharing of net incremental income based on a formula pitch to crude palm oil prices and fresh fruit bunch prices. The profit will be shared on an equal basis 50-50 between tenants and the funds. As for the capital gain, the fund shall distribute any gains realized from the sale process of selected plantation assets in form fees and trustee fee of bonus dividends. There are also fees charged and expenses involved in the administration of the fund, including managers' fees and plantation advisors. There is a risk of over-dependence of single tenant and related part tenants. It is particularly true since the tenant's ability to pay rent very much dependent on their performance in the global commodity market. The fluctuation in crude palm oil and palm kernel prices coupled with volatility of foreign exchange currency rates could adversely affect the ability of the tenants to pay rental, which make up a material proportion of the operating income of the fund. This is the structure of Al-Hadara Boosted REIT. The prospect of Islamic REITs in Malaysia. First, the tax can be generally categorized into two main areas, namely the enhancement of tax transparency system and reduction of investor rate. Under enhanced tax transparency system, REIT is fully exempt from tax provided that the REITs distribute at least 90% of their income. On the other hand, where the 90% distribution is not complied with, the undistributed chargeable income of the REITs will be subject to income tax at the prevailing tax rate. The particular incentive coverage will provide investors more certainty of income and ensure the higher yields from their investment in REITs. Second, the National Budget 2007 also provides tax incentive to entice specific investors to the Malaysian REIT market through the reduction of tax on the investors. The dividends received in local and foreign individual investor and local unit trusts include a pension fund, collective investment scheme, or such a person approved by the Minister of Finance, reduced to 20% from the previous 28% for for 5 years. The incentive proposed in the National Budget 2007 will enhance the competitiveness of Malaysian REIT market. Third, Islamic REITs also expected to operate in a more transparent and well-regulated environment. The issuance of two important documents by Security Commission, namely Guidelines on REITs and Guidelines on Islamic Capital Market. The introduction of the Guidelines on Islamic REITs as guidance on Sharia compliance criteria and requirement for managing Islamic REITs facilitates the development of a wider range of Islamic collective investment schemes or global Islamic funds. It is considered as a supplement to the existing guidelines and set a global benchmark for the development of Islamic REITs. These two guidelines attest sound and tight regulatory framework which promotes transparency and predictability in regard of business strategies and financial standing. And fourth, the Islamic REITs as offered in Malaysia demonstrate high-quality assets which can generate a stable stream of cash flow backed by a steady portfolio of hospital buildings and 100% guaranteed occupancy rate. It may certainly appeal to investors since subscribers are to receive consistent return from stable rental income. According to Rating Agency of Malaysia, RAM, good quality assets are more likely to command sustainable resale values through economic cycles, hence ensuring timely repayment of financial obligation through refinancing and or disposal of assets.
For the conclusion, the introduction of Islamic REITs is viewed as one of the most significant initiatives to broaden and deepen the product base of Islamic capital market in Malaysia. It can also help to enhance competitiveness of Malaysian Islamic capital market by attracting global Islamic investors who wish to diversify their investment portfolio which are Sharia compliant. Undoubtedly, Islamic REITs, with their relatively stable returns, provide investors with a new Sharia-compliant investment options. As evident from the above discussion, Islamic REITs is an investment instrument not only potential in providing investors with a peace of mind in terms of complying with God's law, but equally important the benefits of participating in the steady rental needs of real estate and other properties. Islamic REITs typically have relatively stable cash flow since almost all of its revenue is generated by rental payments. Islamic REITs also offer the benefit of diversification arising from their holding of a portfolio of high-quality real estate with different tenancy length and geographical location rather than a single real estate or building. The emergence of Islamic REITs should help to propel the expansion of Islamic capital market in Malaysia. For Malaysian Islamic REITs to be truly successful, they also have to appeal the vast international investing community. In this regard, the various tax incentive and regulatory framework introduced by the Malaysian